What if I told you that the highest paid person in the entire Turning Point USA entity for that year of 2023, filing of 2024, was not the CEO, not even the COO, not even Charlie Kirk, who built this organization from scratch? Passion, conversations with students that he went to the ends of the earth to get to see really what he wanted for America. What if I told you it was the guy who just picks up the phone and asks rich people for money, and this guy is taking home more than the person who ran a multi-million, $100 million company, actually a nonprofit empire to be exact. And this person is doing this all through a scheme so clean, so carefully constructed that unless you pull the IRS filings from two separate entities and cross-reference them line by line, you would never see it. But I pulled them because you know how I roll, and I see it. And guess what? You're about to see it too. So like, subscribe, hit that notification bell. Let's get right into it. I'm Danks, and today we're gonna go inside the dual compensation structure of a man named John McGovern. You might have heard his name. Turning Point USA's director of major gifts. We've seen a lot of different gift type directors, associates, and senior development, advanced whatever. But this person, John McGovern, is simultaneously collecting a W-2 paycheck from TPUSA, collecting a contractor fee from Turning Point Action, and whose bonus is explicitly in writing on their own tax filing tied to the money he raises. $521,743 to be exact. And every single dollar I'm about to show you comes from their own public 990 filings and Arizona state corporate records. And I'm not speculating here. I'm reading their paperwork back to them. Who is this guy anyway, right? John McGovern graduated from Christendom College in 2012, Catholic Liberal Arts School in Virginia, degree in political science and economics. Before TPUSA, he worked at the Leadership Institute, which is Morton Blackwell's conservative training organization that feeds talent into the right-wing political nonprofit pipeline. At some point, he landed at Turning Point USA, and on their website right now, you can check it out today, he's listed as a philanthropic gift officer. It's really philanthropic of you, John. Right underneath, actually, might I say, Stacy Sheridan and Josh the Fall, the senior director of major gifts. It's like they're all in on it, huh? It's one big party. We're not invited, man. Where's the millions for your boy Danks, huh? When the IRS evaluates whether your compensation is reasonable, fair market value, they compare you to people with comparable titles at comparable organizations, and philanthropic gift officer pulls very different comparables than director of major gifts. Okay, so you have philanthropic gift officer, you have director of major gifts, and John McGovern is director of major gifts. You don't accidentally use different titles on your tax filings versus your website. That's actually a choice. He lives, well, I'm not going to dox his address, even though I'm going to show it probably on the screen. I might even black it out. But remember the address. I might have to tell you the address because it's on the Form 990 where he's getting paid. Tempe, Arizona, 85283. John, these are public records, big dog. Remember that address, though. It's about to become very important. Let's start with TPUSA Form 990 filing for fiscal year 2023. Covers July 1st, 2023, all the way through June 30th, 2024. Part 7 on this TPUSA 990 on the W-2 side. John McGovern has a title as Manager, Director of Major Gifts, and he works 40 hours per week at TPUSA plus 5 hours per week at related organizations. His base compensation is $175,048. Okay, so $175,000 for a director of major gifts at a large nonprofit. You could argue that's in the ballpark. Obviously, for TPUSA employees, that's great salary for a nonprofit. It's on the high side, though, for that title, but it's not insane. So then you get into the bonus line. And bonus and incentive compensation is $245,661. So let me say that again. His bonus working at a nonprofit after getting paid six figures plus is almost $250,000. That's 140% of his base salary on top of his salary. So his bonus is larger than his salary almost by 2x. 1.5x his base salary. Why is this bonus so big? Well, great question. I'm going to show you. Let's go to Schedule J, which is where the organization has to explain these things. And I quote directly from their filings: bonus based on income he raises for the organization. And that's not me paraphrasing. That's not me characterizing. That's what TPUSA wrote on their IRS filing, signed under penalty of perjury, and submitted to the federal government on behalf of their company, paid for by donors. His bonus is calculated based on how much money he brings in on a title and salary that he's already being paid for, and add in $35,960 from related organizations, and you get a total W-2 compensation of $456,669. For the director of major gifts, these are some serious gifts, bro. For context, Charlie Kirk's total compensation was $390,000, a little bit more, $493 at the end of it. So the fundraiser makes $60,000 more than the CEO from one entities. But we're not done, because that's only stream one. Now, let's open a completely different tax filing for Turning Point Action. The C4 arm, EIN 4643311510, same fiscal year, July 1st, 2023 through June 30th, 2024. Same preparer, Baker Tilly Advisory Group. You might have known them if you've seen my videos. Same overlapping officers. Charlie Kirk serves as president of both entities. Tom Sedeka serves as treasurer of both as well. So let's go to Schedule G. This is where the organization discloses its professional fundraisers, the people they pay to raise money. And there, listed as professional fundraiser for Turning Point Action, is John McGovern. There's his address. That's his house. That's kind of a problem. Gross amounts raised by McGovern for Turning Point Action were $1.3 million. An amount paid to McGovern was $65,000. So let's do the math. $65,000 divided by 1.3 million, ballpark it at 5% commission. So let me lay this out for you. John McGovern is a full-time employee working 40 hours a week, W-2'd over as an employee at Turning Point USA. And simultaneously, in the same fiscal year, he's an independent contractor and a fundraiser for Turning Point Action, which is their 501c4. He's collecting a percentage of the money he raises, and it's the same person, the same work, same donors, same overlapping leadership, two different entities, two different tax classifications, and nobody thought that was a problem worth flagging? How can this be? Come on, Scott Bessent. I know you got their backs, bro, but what are you doing, man? Really? Right in our faces, huh? I mean, its combined compensation for this dude is $521,743. Working for a nonprofit. I wonder if the donors know how much money these cats are getting paid. I really do. I want to know. The highest paid individual in the entire Turning Point network. I guess that's what major gifts gets you, right? My birthday's coming up soon. So now here's where it gets really interesting, is that I pulled Arizona's corporate commission records, and on January 29th, 2024, John McGovern registered a brand new LLC in the state of Arizona called Grand Canyon State Strategies LLC. The principal address is 6503 South Bernardin. I can't say this thing for the life of me. I want to say Bonnardarn. Just Bonnardarn Lane, Tempe, Arizona, 85283. His house. Registered agent John McGovern. Same address. What more would we expect from these guys, huh? Member and manager, John McGovern. Sole member, sole manager. It's just all John McGovern. So do you know what's significant about this date? TPUSA and Turning Point Action's fiscal year runs July 1st through 2023, July 1st, 2023 through June 30th, 2024. And he formed his LLC exactly halfway through this fiscal year, 6 months in. So for the first half of the year, from July through January, he's just a TPUSA employee. Then on January 29th, he creates a legal infrastructure. He might have learned this from Stacey Sheridan. He created a legal infrastructure, which is an LLC, limited liability company, at his home address with himself as the sole owner. And for the next 5 months, from late January through June 30th, He raises $1.3 million for Turning Point Action and collects $65,000 as icing on the cake and fees. Now, here's the question that nobody's really asked, or I haven't heard it at least. Why does Turning Point Action Form 990 list the fundraiser as John McGovern at his personal address and not as Grand Canyon Strategies LLC? If he formed the LLC to handle his consulting work, you'd expect Turning Point Action to list the entity name, but they listed him personally, which means one of two things. Either Turning Point Action is paying him personally as a 1099 individual, which creates a worker classification problem since he's simultaneously working as a W-2 employee at the related organization, or they're paying the LLC but reported it incorrectly on the 990. Either way, there's a compliance issue or question, at least, sitting right here. Now, let's talk a little bit about what the nonprofit industry itself says about something like this. The Associate of Fundraising Professionals is the leading professional body for people who do exactly what John McGovern does. They have a code of ethical standards, actually, and this isn't my opinion. This is the consensus of this profession. Standard 23, support fair and equitable compensation, which may include bonuses or merit pay in line with organizational practices, but may never be based on a percentage of funds raised. Never. That's an absolute. Not sometimes, not it depends, never. No, do you guys know what never means, right? Like, we understand do I need to pull the definition of, I mean, I have another computer right here. I'm talking about, we can look up never. If TPUSA doesn't know what never means, we can help a brother out, help a goyim out. So Standard 24 states decline receiving or paying finders fees, commissions, or compensation based on percentages of funds raised. Now, the National Council of Nonprofits goes even further with a direct quote: "It is not appropriate for a nonprofit to compensate a fundraising professional based on a percentage of the money raised." It's their emphasis, not mine. So they capitalize not, N-O-T. Look, I got another computer right here. We can look up not and never. I mean, I got you guys. It's not that hard to. So now let's go back to TPUSA's Schedule J. Bonus based on income he raises for the organization. How is a bonus calculated based on income raised anything other than percentage-based compensation? What else could that sentence possibly mean? And his TPA arrangement, $65,074 on $1.3 million raised, that's literally a 5% commission. That's not ambiguous here. Both sides of his compensation structure violate the foundational ethical standard of his own profession. And the reason this standard exists is simple. When you pay a fundraiser based on how much they bring in, their incentive completely shifts. This is not a sales job, guys. This is a nonprofit donors raising job. They're no longer working for the mission, is what I'm trying to say. They're working for their cut, for their slice of the pie. They have a financial incentive to accept large gifts with strings attached to pressure donors, to prioritize quantity over alignment. When I say pressure donors, you remember that Candace episode talking about the pasture and, when they were, seeing Erica Kirk and trying to have this lady go to grieve with Erica at, come on, you know what I'm talking about, right? The donor's trust is the asset being compromised here. And we've seen it being played out right in front of us. Candace has talked about it. So let me put this in context with numbers over time. Fiscal year 2022 and 2023, John McGovern's total reported compensation at TPUSA was $223,613. There was no Turning Point Action payment reported. And then fiscal year of 2023 to 2024, $456,669 from TPUSA, plus $65,074 from Turning Point Action. So it's a total of $521,743. That is a $298,130 increase. In 1 year, you get a 133% raise. in the six-figure range, getting $500,000 from a nonprofit. His TPUSA compensation alone doubled, went from $223,000 to $456,000. He must be really good. I got an idea for a nonprofit. There's a website I built. You might have heard about it. That's a 104% increase at the C3 alone. And then he created an entirely new revenue stream at the C4, Turning Point Action, that did not exist before. What happened between those 2 years that justified doubling this dude's pay? Did the organization double in size? No. Revenue went from 82 million to 85 million. We've seen this on my page. That's a 3.6% increase. So the organization grew 3%, but then John McGovern's compensation grew 133%. There's a lot of threes in this investigation. Who approved that? Was there a compensation study? Did the board review comparable data? Did an independent committee vote on it? Or did Baker Tilly take a look at this and say, dude, this guy's really good, man. You guys need to pay him more, man, because that's what the IRS requires for the rebuttal presumption of reasonableness. And if they don't follow that process, every dollar of excess benefit is subject to excise taxes on McGovern and potentially a 200% second tier penalty added to that 25% if it's not corrected. In what nonprofit anywhere in America does the development officer out-earn the chief executive by way more than anybody could imagine? In this case, $131,000, but who's counting? You can't. Name one. Can you? I can't. I'll wait for you. Go Google it. Go find any nonprofit where the COO is making significantly less, much less than anybody else in the entire organization. It doesn't happen. Unless something is structurally wrong, it doesn't happen. How compensation is being determined is obviously some type of something. I'm calling it malfeasance. That's my opinion. I have another question that I think is most important out of everything is, Baker Tilly, man, what are you doing? You prepared all of these 990s, the TPUSA filing and the Turning Point Action. They have at Baker Tilly, it's not a small shop. They have it's a top 10 accounting firm. They have over 6,000 employees. They know exactly what they're looking at when they prepare these documents. So when Baker Tilly prepared the TPUSA 990s and saw John McGovern at $456,000 with a bonus based on income that he raises, and then prepared the Turning Point Action 990 and saw John McGovern listed as a professional fundraiser at his home address, raising $1.3 million and collecting $65,000 of it, why didn't they flag it? Didn't they tell the board? No, they didn't, or maybe they did and the board didn't care. Did they document the dual compensation arrangement? Did they advise on the ethical implications? Did they run a reasonableness analysis? Because if they saw it and said nothing, that's a failure of their professional obligations, which they've been known to fail before. I think it was like 83% of the time. But again, who's counting, right? So if they didn't see it, how did they not? It's on the filings that they prepared. His name appears on both documents that they signed. And here's a question that it doesn't keep me up at night, but it's something that I want to know is when we know McGovern's TPUSA bonus is based on income he raises for the organization. We know he raised $1.3 million for Turning Point Action, but Turning Point USA and Turning Point Action are related organizations with overlapping donors. Many of the same people who gave to TP Action also gave to Turning Point USA. So when McGovern is out there cultivating a major donor or a major gift from a major donor, taking them to dinner, building their relationships, and then the donor writes a check to Turning Point Action, does that activity also count towards his Turning Point USA bonus? Because if it does, then McGovern is being paid 3 times on the same donor relationship. Once at TPUSA from his base salary, twice from TPUSA's bonuses, $245,000 calculated based on funds raised, and then 3 times, thrice, from Turning Point Action from his $65,000 of commission calculated as percentages of funds raised. 3 bites of the same apple, 3 revenue streams from the same activity, 3 compensation structures all flowing to the same person from 2 related entities controlled by the same exact people, not just double dipping. This might be triple dipping here.